So good evening, everyone. Today we'll be talking about the advanced market structure. Yesterday we talked about the basic market structure, which I already gave example. The basic market structure is just simply being able to know where the market is going by following up with your what's it called. Just structure anyway. But the basic market structure is just knowing where the market is going, using your Fibonacci to measure the 50% zone and following up from there. Understand? So if you know how to do that also, you can make profit. But before you can make profit using that alone, you need to know which one is your swing. You need to know where your swing structure is, and you need to know which one is your substructure. Understand? You need to know the difference between the swing and the sub. The swing structure is something like this. The swing is something like this. Every other thing that is happening within this place, see price get back here before going back. From year to year is your swing. From year to year is another swing. From year to year is another swing. All the things happening within here, they are substructure. From here to this place, before price break this place, is your minor structure. So from here, anything that is happening within, to get to the place before I start buying is what's your substructure. From year to year swing, from year to year. So you need to know the difference between your swing and your. Let me show you something. Some people now, they may just see something like this on their charts. Let's say in a bullish market, you are seeing things like this. Then price start doing something like this. How do I put this? Price started doing something like this. And they want to buy from around this place. They want to start buying. Not knowing that price will still take out all this place. Price is coming to 50%. Let's say if you don't know anything about swing now, if you use your fib now from year to year, you can see that price has not touched this place. So anything that is happening around this place is just creating liquidity. Price will surely reverse to do something like this first. Later it will reverse to do something like this. Take out all this place to take them out, then it will now buy. So you now you're already in the market, you already bought. Before you know, you hit your stop loss. You start feeling bad, not knowing that you didn't follow what you're supposed to follow. You didn't trade the way you're supposed to trade. Understand? That's just something about basic market structure. But today we are talking about advanced market structure. So if you watched the video about yesterday, you know things I talk about the basic market structure. And also, I'm recording everything and I'm uploading them. You can refer back to them. Now that you are in the class, you don't need to start jotting anything. Just watch what I'm doing. Watch what I'm doing. Then, when you watch the video again next time, you can probably note something down. Who is this again? Now, please stop writing on my screen. So today we are talking about the advanced market structure. Who is Anthony? Anthony, please. Advanced market structure. So this one thing about this one is if you know how to spot this advanced market structure, you are already halfway there. You are good to go. You understand? If you can spot them, the way you were able to like know where your higher highs are, higher lows are, all those things. But if you can spot what's it called, the advanced market structure on your charts, you are already good to go. Understand? Very good. Who is this now? Please stop disturbing the class by if if you are in the class, stop switching your phone from one place to another. Just if you don't want to be in the class, you can just close from the meeting. Or if you're in the class and you are doing all that thing on your phone, it will be disturbing us here. Please let the people that want to concentrate, please. Because if I keep like switching to cancel what you are drawing on the screen, maybe the things I was supposed to say, I'll forget it and I'll say another thing. So advanced market structure is a better way to view the market. It helps you to reduce losses and um, be aware of where your liquidities are. It helps you not to be liquidated like always. To help you to not get to not have too much losses in your trading, you understand. But if you don't know things about advanced market structure, I'm not saying with the basic market structure you don't make profits, but with the advanced market structure, the amount of losses you have will be minimal compared to the basic market structure. You understand? It will be minimal compared to the basic market structure. So in the advanced market structure, they are like this. They are like this. These are things you'll be seeing in the advanced market structure. You have things like this. Sorry, I'm coming. Let me delete this. First of all, you have if okay, let me say for the sell side and the buy side. Let me just put for sell side, for buy side, for buy and for sell. So we just do it a simple way for everybody to follow up. Now, for the buy side, the advanced market structure, you have something like this. There are three types basically, but the third one is the hardest, but that's the one I like trading most of the time. That is the hardest, but I like trading the third one most of the time because that one, once you are good with that one, you are good with it. You will make a lot of profit with it. I like trading. I like using the third one mostly, but there are three types. But the two main type, the first two, they are the one that you will need to know very well. If you know those two, you are good. But the third one is very hard to know. But if you can know that one, you are also good with it. But the first one and second one, when you know them, you are good to go. You don't need to know the third one. But me, I like using the third one. I like using the third one very well. That's if I not get confirmation from the first and second one. I'll wait for the third one. So if I wait for the third one, then I'll take trade from the third one, and that one gives me more profit and more confidence to hold my trade very well. But the first and second one too, they are very good. They are very good. If you can spot them very well, you are good to go. So first one, you have something like this. First of all, in the advanced market structure, you have for the buy side, you have something like this. You have sell side liquidity, which will be taken out first, which is this place. This place will be taken out. Is this sell side? Yeah, I think this sell side liquidity will be taken out first. Then you have a break to the upside. You have a break to the upside, something like this. It doesn't matter. You price may be selling before. Price may be doing something like this, maybe selling before, maybe selling. Then immediately price start giving you something like this kind of um this on the higher time frame. First of all, you have this sell side liquidity. You must have it. If you don't have this sell side liquidity, that price will take out. Then price will now reverse back up to take it out. This should be on the higher time frame, something like that. It's not on every lower time frame that it will form that you take it, but on the higher time frame is more preferable. Then price will take this out. Then price will reverse back, giving you pullback as liquidity. Then price will go back up. Then take this place out. Then you wait. In the basic market structure, we just measure Fibonacci from this place to this place and say, okay, we want to take trade within this place. But in the advanced market structure, price will surely come and take out this place first. Then after taking out this place, then before you start buying. The advanced market structure is something like this. Price will give you something like this type of structure. Now, This is for when price is trying to sell and it start giving you this pullback. And in other ways also, price may be buying. Let's say price has been buying on the higher time frame. It has been buying in the higher time frame, giving you breakouts, coming back, giving you all this. Then eventually price reverse back, lately taking out this place. Then went back up, take out this high. So your swing now, your swing is from year to year. It's not from year to year. Price did something like this. Then you wait for pullback. Then maybe a little bit pullback to around this place or breaking above anyone. Then price reverse back, take out this place, then buy. So in simple time, I'll put it in a simple way for you to understand it. I'll put it in a simple way for you to understand it. I was just trying to say it doesn't matter if price was selling before, giving you this shape, or the price was buying before. That was I was just trying to show you now. So I'll give you in a simple form. Let me just put it in ABC form. Understand? So first thing you should know is price for the buy side. Price will give you sell side liquidity. For this one also, for the sell side, price will give you buy side liquidity, something like this. I'm coming. Let's say price start doing something like this. Price will give you buy side liquidity. You should see something like this first. This your sell side. Is this sell side or buy side? Anyway, I'm just trying to. I think this sell side liquidity. This buy side liquidity. I've forgotten the name they call it, but it's just for you to get the concept. Just get the concept first. So price will give you something like this. Price will give you something like this first. You will need to have a break to the downside. Then after price break the downside to go back up, break this high. The same thing here. Understand? Giving you this type of shape first. Now you can now call this place your A. You can say this A. You can call this place your A. And also, this place is your A. You can call this place your A. I'm just trying to label it as A, so ABC, so you can understand what I'm saying. So this one now, the pullback that is happening to around this place, any pullback that is happening, is your B. Understand? Any pullback that is happening is your B. Then this one, that price is going back up, is your C. This place, this pullback that will serve as your liquidity that will be taken out is your B. Then this place will be your C. Now, I taught you something. I was saying that in the basic market structure, your swing is something like this. Your swing structure is from year to year. You understand? But in the advanced market structure, your swing is from year to year. This is your swing. But in the basic market structure, your swing is from year to year. So that's the difference. Understand? That's different. It's not something that is hard. It's not something that is hard. If this is the first time you are seeing this, it might look hard for you. But just watch what I'm doing. You have the recording is there. You can watch it later and sit down and study. You understand? You watch it later, sit down, study. After studying, you will draw this thing on your paper. You understand? You draw this thing I'm drawing on your paper. When you draw it, then if you can draw this thing on your book by yourself, if you can draw it and label it by yourself, you can take your phone or your laptop, you see this, you try to look for it on your laptop. Once you can see it on the chart, you will never unsee it again. That's one thing about it. Once you can see it, you will never unsee it again. You understand? So just watch what I'm doing first. Then later, or tomorrow when you have rested, you watch the video and practice by yourself. Draw them in your book, then follow up. You will see that it will be very easy for you. So this like ABC pattern, something. So the use of Fibonacci in this aspect is for you to measure your, what's it called? To measure this place, to measure this your pullback. Understand? To measure your pullback must be 50% or above 50%. Let me say, um, I'm just trying to show you something that you don't need to stress yourself very well. You don't need to stress yourself very well. Let's say in a bullish market, price is giving you something like this. Then sell side liquidity going back up. After going back up, then it pull back like this. Price started coming down like this. Then immediately just went back a little bit around this place. Then started coming back. This thing is not valid anymore. If you take this buy, 80% of the time it will not play out because this pullback that happened here is not up to 50%. Let me use Fibonacci for you to measure it for you. This whole thing that happened here is not up to this 50%. So this thing is telling you that the price is coming aggressively into the points of interest that you are marking. I know that for you to take a buy or sell setup, price must come aggressively into your POI. Then when it's giving confirmation, you take the trade. But if your liquidity, the place you mark as your liquidity, is not valid, most of the time it will not play out. Understand? So the pullback must be at least up to this place or above or even break it out. You understand? So you must know that also when you are studying. So if price start coming back aggressively, you know that okay, 80% of the time it will play out for you. Or 85%, let me say 85% of time, it will play out for you. You understand? So that's one thing you should note. This pullback is essential, it's very important. Anyhow, I don't know how to put the English, but it's very important. You should know this pullback. You should know how it works. So let me delete this. Then we'll go back to our main um, structure. I was telling you we have type 1, type 2, type 3. So this one, this type 1, this type 1 structure. This type 1, this type 1. First of all, you need to see something like this. Price, price giving you the buy side liquidity, or is it sell side? Anyway, I don't know the name, but price should give you something like this first. Then a break to the upside. After this break, price should give you pullback, then reversal either to 50% or breaking above it. Understand? Reversal, this pullback here, then price giving you reversal to like 50% of the pullback or breaking above it. Understand? You look for that on the chart. Understand? That those are the things you need to know. Price giving you sell side liquidity. Then after that, break above this high. After this high breakout, price giving you pullback. Then after this reversal, it will reverse back a little bit to like 50% or above it. Understand? Then later you wait for price to come back, take out this big, then start buying. That's when you see confirmation. Now, that's type 1. For type 2, our type 2 will be like this. Type 2 is like this. First of all, you see something like this. You see price giving you something like this. You come, So for type 2, is that one is simple, but most of the time you may not see it on the chart. Understand? Most of the time you may not see it on the chart. But when you see it, it's also very good to take the trade. Understand? When you see it, it's also very good to take the trade. Now, for type 2, one thing that you need to know about the type 2 is that before price break the structure, before price break the structure to the upside, it has already given you pullback. Then going above to break the structure, like it's giving you a double break. This is its first break, which is within the swing. That's what I was saying, that you should study, you should know where there's the main break of structure. I was saying it yesterday. You should know where there is main break of structure, and you should know where there's substructure. Understand? So anything that is happening within this place was substructure, which price broke above to the upside. So this is the main break of structure. You understand? Then what do you expect price to do? Let me just label it for you. This place should be your A. This is your B, and this is your C. It's just that simple. So your what is it called? Your B, price will surely do what? Take it out when price is coming back. So take it out. After taking that, then it will buy. You can take your TP at this place or anywhere you see any price trying to pull back, maybe giving confirmation for sell. You understand? So this type 2. Type 1 is like this. Type 1 is just straightforward. After price giving you this buy side liquidity, or is this sell side liquidity? Sell side liquidity. Then price doing what? Break this high. After breaking this high, then pull back to give you your B. Then breaking above to give you your C, which is your swing. Then price coming back, take out this B. This B must always be taken out. Same thing here. Understand? Same thing here. Same thing here. So for the sell part, price will also give you the same thing. This is your A. Understand? For type 1, this is your A. Then price going back up to give you back as your B. After price giving you your B, then price will come down to break this place to give you your C. Sorry, let me delete this. But I said before that most of the time it's not by for price to do what? Break it out. Price may come to this place or around this place before going back. Understand? Depending on what the price action is doing. But price, for you to, like, for just example, price will just give you your C. I'm just using this as an example. But if you don't see this, if you see something like this, it's still valid. If price comes to around this place is your C, this place is your B. Or price can either go above the 50% or break above the 50%, like using your Fibonacci. You measure from year to year. Is it that price do what? Go around here or go above it, below it, sorry. Understand? It's not something that is that. Just calm down. I'll show you the example on chart. So this one now is your B. This is your B. This is your B. Then, sorry. Then this is your C. Understand? This is type 1. I already explained it for the buy side. So the same thing for the sell side. So for type 2, you have something like this also. First of all, you have buy side liquidity. The price will go above to take out. Then price coming back price coming back is either price will come to around this place, then pull back, maybe because of any other block around this place, give you a little pullback, then do what? Come out to break out above it, below it, sorry. You have something like this. Now, this is your A, this is your B, this is your C. Understand? So it's as simple as that. Understand? So you can say this is your A. You can label it. If you are labeling it, it will be simple for you. Understand? You can say this is your A, then you can say this is your B, then you can say this is your C. You understand? So you can just label it. If you look at it now, it's the same thing with this one. This type 2. This type 2. And it is good if you can spot these things on higher time frame. It will play out more. Like, let's say you are using the 4 hours time frame. If you spot it on 4 hours time frame, 1 hour time frame, 30-minute time frame, they are good. Understand? They are good enough. But spotting it on 5-minute time frame is not too good. I won't say it's very good. Like, the main one I use is 4 hours and 1 hour. 4 hours and 1 hour. If I can spot these structures on 4 hours and 1 hour, I will be happy. I use 4 hours, 1 hour, 30 minutes to spot them. If I spot them, then I know that okay, this one is good to go. That's after I know that okay, this chart is telling me that 4 hours telling me that okay, this from this to this place is swing. 1 hour is telling me that from that place to that place is swing. 30 minutes also telling me that from this is swing. You understand? Understand? If it's confirmed that I'm having the real break of structure. Understand? Like this break of structure that happened here now is the main break of structure. Anything that was happening around this place was minor, you understand? And substructure. Understand? This one that happened is substructure. This pullback, understand, is substructure, is within the structure. You understand? So this type 1 for buy, type 1 for type 2 for buy side, type 1 for sell, type 2 for also sell. So now I will try to show you example of type 1 and type 2 on the charts before we go for type 3. Understand? Before we go for type 3. What chart should I use? Let me use another chart. This one is already messed up. Let me use, okay, let me use this Euro NZD. I've been waiting for this sell. This 4 hours time frame. What can you see? You can see buy side liquidity here. You can see this pullback, which is your B. Then you have this place as your C. This place. Let me delete this. Now, what can you see? This is your A. This is your B, which is the liquidity. And some people, they want to sell from here because of this other block here, or because of this other block. But you don't have a buy side liquidity here. Why do you want to sell? So this one is the main liquidity. Even if price is reacting to this, price will surely react to this other block or failed other block that is here. Price will react to them. We'll try to show you that I want to reverse. Price will do something like this. Price may do something like this. Price may, let's say price was buying, giving you this, or this. Price may even come to this place, start giving you confirmation that I want to sell safe. Later, it will just come and take you out and come to this place straight because you want to take this B out. Then it will start selling. That time you will now be feeling that what you were taught is wrong, is wrong. It's not wrong. It's because you don't know what you are doing. You didn't say buy side liquidity and you want to start taking your trade from there. Sometimes it may play out, but it won't play out for long. Most time that is play out is because maybe um price has started giving price has already changed structure. It's just trying to follow the basic market structure, break of structure, break of structure. You understand? But this one, something like this, not work out. You understand? So looking at this chart now, you already know that okay, you know this is your A, this is your B, and this is your C. You can label it already. So this is your C. First of all, what did I see? You should have this, you have this, then this. This is where the break of structure is. This is cell part, this is cell side, this is cell type of structure that I showed you now. Type 1, this type 1, this type 1. You can see it, this type 1. Let me show you again on where's the GBP USD. I didn't add it to the chart. The pair I trade. Okay. You can see that there's no difference with what I show you now. You can see A, B, C. If you go back to the what's it called? Let me just add this to my favorite first so I can refer to it quickly. I don't trade GBP USD like that. That's why it's not my favorite pair. So you can see now, if you go back to this Euro NZD now, you see that it was what I showed you. Understand? So now that's type 1 for sell. Let's look for type 1 for buy. It should be on, I should quickly spot it on this thing. Okay, see type 1 for buy. Now, what do you see? You have price taking out the, what's it called? The sell side liquidity here. You can call this one your A. This place, you can call it your A. You can call this place your B. And this place will be your C. Now, if you look at this whole thing, you will not want to take your trade around this place because price may react to this place. Price may start selling. Maybe it was selling, coming, doing something like this. Then when it comes to this other block, there's another block here. To come to this other block, it will price will actually react to any zone that you have. It may start giving you something like this that is showing you that I want to pull back. Price will just come and take you out because it's coming to this place. Yeah. You may think that okay, price has already started buying you think that you are missing out. You are not missing out. Price will just come to this place first, then to now buy. You will now start feeling bad. That why didn't you wait for your main zone? Understand? So that's it. So this is type 1 for buy side. You can see type 1 for buy side. Understand? This type 1 for buy side. Now we should look for type 2. If I can see type 2, it will be better also. Let's look for type 2. But most of the time you may not see type 2. But when you see type 2, it's also good. It's also good. Can I see type 2? This is also type 1. You can see price taking out this place, then pulling back up, giving us this pullback. Then you can see this pullback is up to 50%. That's what I was telling you. If you measure from this place that price was pulling back to this place, you can see that this pullback is up to 50%. Then price did what? Reverse back into this zone, tap it, then start buying. You can see. So if you go to like lower time frame, you may spot them easily. You may see a lot of examples. And most of the time, it may not play out. It's not that it won't play out, like 80% of time it play out. But when price has changed character, maybe due to what's it called? Maybe news. Price may just spike and move anyhow, change the price will just move anyhow. Maybe they want to go to another zone that I want to tap in. Just wait. That's why you need to learn to, after learning all the structure that you can spot them, you still need to learn confirmation to make your trade very good. Let me look for type 2. Where can I see type 2? I don't want to use any example. I want to use good example. Which pair is this? Chef JPY. Okay, this trade. I use 1 hour time frame to analyze this pair. I use confirmation. I took the trade from here and I was waiting. Okay, now let me use this one for example. Let me use this one for example. Now, what do you see here? We have a sell side liquidity here. This is where the main break of structure is. This is where the main break of structure is. But before price broke the structure, there was pullback. Understand? Which is this? Which is our B. You understand? This is our B. This is our A, B, then this is our C. You can see that price later reversed, but I didn't take it because it was 1 hour I used. Let me switch to 1 hour time frame. 1 hour for better view. Now, this is what I was saying. You should know where your swing structure is. Understand? You should know where your swing. When price was buying before, this was the analysis I did. Understand? I did this analysis from here. This is where I did the analysis from. This is what I saw. I saw this pullback. This price was buying before. Then this is where the swing was supposed to be for me. After this break here, then I have another high here. Understand? Then what I was waiting for was price to do what? Come down, give me this. After this, I saw, okay, I made this one my sell side liquidity. Then I was waiting for price to break above. Price broke above it. Then I marked this zone. After marking this zone, I made this one my liquidity because this was the only pullback that happened. After the break of structure to the upside, this was the pullback that happened. So I marked this place as my liquidity. Then I marked the zone. So when price was coming out into all this place, I didn't care. I was waiting. I was waiting for price to do what? To also give me something better. So after price giving me this, then I waited. I marked this zone. So looking at this now, you can still see the structure we mark. We have sell side, price going up. Before breaking high above this place, price already gave us our B here, which is the liquidity. Then price went up to do what? Break above this. After breaking above, we have our C here. What will I wait for? I'll wait for price to come and take out this B. Then price did what? Take out the B. After taking out the B immediately, you can see that price started buying from the fair value gap, which is my POI that I marked. This whole thing that happened was from the POI here. There was a POI here that I marked before. Then after price got to my POI, I need more confirmation. Understand? Then I also did what? Follow this also. Then price tap into my zone after marking another POI inside my main POI to get a better sniper entry. Then price did what? Reverse back. Price will be doing something like this. All these things that happened here, you may be feeling that price has gone, it has left you behind. It has not left you behind. It must surely come back, tap it. You can see that you just tap it immediately, start buying. So now you can say this is your type 2. Look at this. You have your A here. You have your B here, which is the liquidity that price will surely take out. And you have your C. It's just that simple. It's not something that is that. Once you can spot it, it's okay. If you can spot it, that's all. This is your B. This is your A. Also look at it here. You have your A, you have your B, then you have your C. This one, I didn't take this one because the place I marked my POI was still down. I think price has not even taken out the B. Price will surely come back, take out this B first. It has not taken out the B. It has not taken out the B. It will surely come back to take out this B before it start buying. So this is my A for this one. This type 2, I'm showing type 2 now. This is my A for buy. This might be, for type 2, it's different from type 1. Type 1, the B is after price has broken out of the what's it called? The higher high here, understand? And your C is here, understand? So that's it. Now let's look for type 2 for sell. So let me show you again type 2 for buy. Where was the example I made? Then put on 4 hours. You can see the different. You can see what we were spotting is the same thing with what I drew. You understand? The same thing what I drew. The B before this break to the upside. Understand? It's just that simple. It's not something that is so hard. So if we switch to the 1 hour time frame, you'll see everything clearly. You can use any time frame to spot it. You can use 1 hour, you can use 4 hours, you can use 30 minutes. You can see same thing. We have our A, we have our B before the break, then we have our C. We have our A, we have our B, we have our C. Understand? So that's it. Now we are to look for the type 2 cell structure. To look for the type 2 cell structure now, where can I see an example that will make sense for cell? Let me use, I don't think I can see any good one. For cell, no, this is also for buy for AEDJPY. You can see this type 2 for buy for AEDJPY. Where can I spot example? For example, let me put on 4 hours time frame. Maybe I can spot a good example. And if I can't spot it, I'll already show you the buy side. Sometimes you may not see it. You may not see the type 2 most of the time. You may not see it most of the time for the buy or sell structure. But once you can see them, it's also good. Let me look for it on another pair. I can't see the sell side on type 2. This one that happened there is type 1. This type 1. This, then price taking out this B, then selling, or the sell that happened. I'm just looking for type 2 sell. If I can't spot the type 2 sell, that would be an example. You can use another pair to spot it for me. If I can't spot them on this pair of my example that I used to trade, if I can't see them, then you use that as an assignment for me. You do it as an assignment. Where will I see this example? It's not looking, I'm not seeing any good example here for it. Let me check another pair. USJPY. Okay, this was my class last week with my students. I was telling them they should buy USJPY and price reverse back to the zone I marked for them. Then, but this is what happened last week. Last week we analyzed on Monday class. Was it Sunday night? Yeah, I analyzed on Sunday night around this place. I was telling that the price will surely reverse back to this place that before it will buy. So this is what happened. That's why price reversed back on Tuesday. Then we started buying. I didn't tell them when to buy, but I bought. I took the buy. Took this buy. I already analyzed it from them in the class, and they were in the class already, so they should know what to do. So you can see where I mark my liquidity. After this break, I mark this liquidity because I said when you want to mark your liquidity, the pullback should be what? At least 50%. You can say after this whole thing, price reverse back to at least 50%. Then I was telling them that price will take out this place again, sell down to this place, then we can buy. So I'm trying to look for the sell example for type 2. If I can see the sell example to be better, at least to be better. But if I can't see it, you try to spot them. You try to spot at least two sell examples for me on two different pairs. Maybe I'll just switch to lower time frame to look for the example. If I can see it, then we'll go with that. Then I'll show you type 3. Let me use USJPY. I might quickly see an example. Let me use 30-minute time frame. It's like the class is getting longer. I don't want it to get longer. I don't want it to be longer than this. Spotting the buy sometime. Maybe it's because price has been a bullish market anyway. Let me look for sell for the type 2. One thing is that if you cannot spot it, if you come to your chart and you are not seeing it, you don't need to force it. You have to go to another pair. And if you are used to only one pair or two pairs that you used to trade, if you can't see that setup on it, don't go and look for what you are not seeing. No? You take losses. You understand? You take losses. I'm trying to look for type 2 sell. If I can't see it, then that means we'll just go for type 3. What's it called? Explanation of type 3. I'll just give brief explanation on type 3. Then our next class, when I'll be talking about POI, I'll teach the rest. I'm coming. My laptop is low. I didn't even know. I'm not seeing a good example for this type 3 anyway. I'm not seeing a good example for the type 3 cell. But it should look like something like this. Let's say I just marked this for pullback and price came to it and give a little pullback. Okay, let's say we have this. Then before this break to the downside, understand this 30-minute time frame. Before the break to the downside, we have this pullback. This is where price was supposed to break. Understand? So before price broke it out, you have what? You have pullback, which is now your, which is this, which is where you expect price to do what? To take it out. You later saw what happened. Price took it out before it started selling. But this is just pullback. We are already in the buy market. All this one is just pullback. Price will surely react to every zone that is in the market. Price will react to it. That's one thing. Price reacting to it doesn't mean that it's changing direction immediately. Price will react to every zone in the market. That's where you always have pullback. Let's say you were buying already. You are buying, price is going your way. But you cannot say price will continue going, price will surely pull back a little bit, then continue, pull back a little bit, continue. So all those pullback that you are seeing in the market is because of other zones in this market, like this place now. Price reacted to it because you can see this zone here. Price reacted to this place because you can see after price came to this place, there was this wick that was there that pulled back. Understand? That's the pullback. Then what? This place, this zone that I marked, this fair value gap that I marked was after it was above my B. Understand? Then price took out the B, then tried to pull back a little bit before it continued buying. Pull back, tap into this field or that block here, then start buying. Understand? So this type 2 for sell. Let me just label it for you. This is just like chart example. It's not that this is the real type 2 when you have to mark it on higher time frame. But it's showing a good, it's just for showing good example, you understand? Just for showing good example. Just for you to be able to like spot it whenever you are using higher time frame, or whenever you are you saw something like that, you can mark it, you understand? So this is your A, B, C. Understand? If you go back to our GBP USD where I mark everything out on the 4 hours time frame, you see that that's type 2 example. Understand? Price will reverse, take out this before it starts selling. So that's what happened here on USJPY. But it didn't sell for long because that was not the direction of the market. It was on 30-minute time frame. The direction was buy. If you are seeing something like this, you shouldn't be selling. Understand? You are seeing series of break to the upside. You shouldn't be selling, looking for buy. The only time you want to sell is because maybe you are still in the premium zone. Understand? Even while in the premium zone, it's not good to counter trade. You need to trade according to what you are seeing. You understand? So any pullback you are seeing is just a little pullback because price is coming back to the buy zone. You understand? So this is type 2 for sell. So now we'll go back to our GBP USD to mark to type 3 example. I may just what I'll just do for type 3 is just to show you, draw type 3 for you. Maybe in the next class, I will show you the example of type 3 and how they play out. Understand? I can delete this, right? Let me just delete this ones. So we can I can draw the type 3 for sell and buy. Then I can stop recording. So the video will not be very long. So what you will do for me is watch this video again. Try to spot your, what's it called? Try to spot type 1, type 2. You only need type 1, type 2. But I'm used to type 3. I like trading type 3 most of the time. That's the only time I trade type 3. I trade type 3 is when type 1 and type 2 doesn't give me confirmation. So I'll wait for price to take out all the old zones of type 1 and type 2. Then I'll now start looking for confirmation to trade it. Then to take it to type 3 example. Let me just use my screen for faster. There's a way to clear this thing once, but I'm not used to it. Okay, let me just use this side. So the video now will long. Let me just use one side. So for type 3 now, it's something like this. Type 3 is something like this for the buy side. Let me just show you briefly. You only have your A and your C for type 3. For type 3, you have something like this. First of all, you have the sell side liquidity taken out, then price will go up. Understand? Price will go up. Understand? Then price will now start giving you something like this around this place, maybe this pullback. Then to start selling, doing all this. Understand? Price will do all this. Then it will come and take out this place. To be doing this, all this. it will be doing all this reaction, then to take out this place, then to now buy this type 3. This zone that was supposed to be protected low, price take it out. Understand? This was supposed to be your swing. Understand? A and C, from A to C was supposed to be your swing structure before. But now A to C, just A will be the liquidity now. Understand? Before, B was supposed to be the liquidity, but we don't have B in this aspect. So this A will now be the liquidity. Price will take it out, give us something like this. Sorry, let me just give you something like this. Then do something like this. Then buy. This is type 3. Now your A is liquidity in this place. You understand? The A is the liquidity in this place, in this aspect. A is the liquidity. Now this for buy side. This for buy side. Let me do for sell side for you. We'll spot the example next time, our next class. So this class will not be, the video will not be too long. It will not be too long. I don't want it to be too long. I think we have spent more than 1 hour. But most of few of the time we use it to check the assignment, and I didn't record that. So for sell side, we have buy side liquidity, price taking out with buy side liquidity. After that, price will do what? Come down, then start giving you all this. Remember your pullback, remember this thing. Is either it gives you something like this or something like this. Start going back, buying. You see a lot of buy. All this buy that is doing, all this whole thing that is doing, it's just liquidity. So when price approach your POI and take out this I, after taking out this I, then price start giving you something like this. If price gives you something like this, and come down and start, if this thing wants to sell now, after doing this confirmation, if you want to sell, it will sell very fast because it wants to wipe all this place. It wants to wipe them. So it will sell very fast. Like it will quickly eat your TP. It will sell very fast. This type of market. This one, that's why I say I like trading this one, because this one, when you want to dump, it will dump very well fast. And when you want to buy, it will buy, because all this liquidity that I build up is too much. So it will want to wipe them out faster. You understand? But for you to spot this one is very hard. Understand? But if you can spot A and B, that type 1 and type 2, you are good. But if you can spot this one, that's after you are good at those ones. If you can spot this one, then you are good to go. You don't even need to stress yourself anymore. So this one is your A in this space, and this is your B, and this is your C. Sorry, you don't have B in this aspect. Your A is the liquidity in this place, which is here. You understand? So that's this type 3. This type 3 structure. This type 3 structure. Understand? So it's simple as that. So in our next class, which is tomorrow, what's our next topic? Let me check. Our next topic should be what's our next topic? Liquidity. Okay. I will just show example of type 3 tomorrow. Then we'll continue with our main class. Understand? So I've already shown you type 1 and type 2 example on the chart. What you do for me just to spot them for me using 2 different pairs. Spot the sell and the buy side for me. Send it to the assignment group so we can just check them out again tomorrow. Understand? You watch the video again. So what I'll do now, I'll stop recording first. I'll stop recording. So if you have any question, you can just ask. What's wrong with this thing? Stop recording. Stop.